So, good morning, everyone. Good morning from anywhere you are, whether you are in Nigeria, you are outside the country, or wherever you are. So, today we are looking at how to create chart of accounts for any organization at all, whether you are in the oil and gas industry, you are in the aviation, you are in the automotive industry, whatever industry you find yourself, okay, the first thing to do as an accountant is to first of all set up the chart of account. Now, the chart of account enables you to know what are the asset class for that organization, what are the liabilities that that organization owns, what are the equity, what are the incomes, okay, what are the income streams of that organization, and then what are the expenses, their kind of expenses, what is the cost of sales. So all this information enables you to be able to properly account for that organization. So it therefore means that if you are an accountant or wherever you are, maybe you're a bookkeeper, whatever you are, if you don't know how to create chart of account for an organization, you failed as an accountant for that organization. So the first thing you should learn as an accountant is learn chart of account for different organizations. So today we are going to learn how to create our chart of account. I'm going to take us through a very detailed process from the first thing to do to the last thing to do. Then that chart of account that we're going to create is what we are going to go ahead to come and import into our Zoho books. So this is the Zoho book. In the morning when we met, we learned how to create an account, a new account for Zoho books. So now we are going further to now create the chart of account. So if we come to this accountant module, right? You click on accountant module, you will see we have manual journal, you see we have bulk update, we have currency adjustment, we have chart of account. So this chart of account now that we are trying to create, okay? So now automatically when you open Zoho Books, there is this default chart of account because you are telling Zoho Books the industry you want to operate in. So because you told Zoho Books the industry you want to operate in, Zoho Book creates a replica chart of account for that kind of industry for you. But the challenge is that that chart of account may not really answer all your questions. You could have needs. What do you want the company? What are the things that the company does? What are the unique things that the company does? So you need to tell Zoho Books, okay, these are the unique things that we want you to work with, okay, and not just work with whatever is inbuilt in Zoho Books. So today we are going to learn all those things, and I believe that at the end of this training, you will be better than you came to the training. And also remember, whatever we are teaching you this training, we hope that you're going to put it into practical use in your real day-to-day activity. So without wasting time, we shall delve into it. So what I'm going to do is I will be opening a chart of account, okay? The one that I've created before. So this is a chart of account, right? So let me teach you how to create this yourself. What I'm going to do is I'm just click on Control N to open a new workbook, okay? So this is the new workbook. Now, you can see the way this new workbook is. So there are certain things that you must know when you're trying to create the chart of account. So the first thing you want to know is this. Number one, you want to learn the things that we should create. Number one, under our first column, we are going to put something like, so let me do something. So the first thing we're going to put where we are now, we're going to put codes of account. So we say code range. That's the first thing. Code range. That's the first thing we're going to put as the heading. Then the next thing we're going to do is we are going to move again a step further. We're going to call account class. So just look at the things I am showing you. The next one is account class. Then the next one after account class, we can call it a classification. So let's call it classification. Classification. Okay, so that is classification. After classification, then we can go to the codes of account itself, the codes of the account itself. And after we go to the code of the account, we can go to the next place. We can call this one description. So this is description. So when you have your description, the next thing after your description, you want to have your account types. So let's now go, the next one is the account types, right? So the account types that you're going to use. So once we have these, fine, we are getting somewhere. The next thing is we need to now select everything and make everything visible. Okay, so we can see the first thing is our code range. The next thing is we have our class, our account class, right? We have the classification, and the last thing we have the codes. Okay, so all these things are what we are going to work on in this class, right? So we have all these things. So let me make it longer. I think I might need to like extend the 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 length of each of these cells because I want it to contain more things. Okay, fine. So I think this is good enough. Now, the next thing we're going to do is that we've seen all these things, right? All these things, these are the headings of our chart of account. We are trying to create the chart of account from scratch. So the first thing I say you should do is number one, the first thing is you need to have these headings. The first one is code range. The next one is account class. The next one is classification. The next one is code, or let's call it codes. Let's call it on codes, right? Then the next one we have description, and the last one we have the account types. So let me tell us now that in in accounting, there's what we call the element of account. So in accounting, there's what we call the element of account. There are basically 5 elements of account. So we come under where we have our account class, right? Let's put the elements of account. So what are the elements of account? The first one we have is what we call assets. So the first element of account that we have is asset here. That is that. So because assets are appearing first, let's put assets or whatever it is. So asset is the first one that is appearing. So because it's the first element of account, we are calling it code one, right? So that is the code one. Then the next thing we want to do is that we want to also go further to where we have our codes, right? Because asset is the first item on our list, then we want to start with one, right? Because asset is taking number one, right? So we are also going to start anything that is our asset, any asset we have, we are going to do it to be 100,000. So that's what we're going to use because this is one, the code range is one, then the code itself, we want to call it 100,000. So there's another thing I also want to do. I also want to like make this thing centralized because I want a lovely presentation. Fine. So now, here is it. So now we have, so let me also select all these things and make them centralized. I come here and I put it at the middle. Beautiful. Okay. So it's not giving me what I want, but at least let me do it again. I click on it and then I want to show everything at the middle. Okay. I think it's fine now. So you can see now we have how many headings? 1, 2, 3, 4, 5, 6. So for any organization at all, just have these headings that I talked about. So here is actually going to be figure. So because this place is going to be a figure, what we want to do is that we want to make this place to serve with is it a comma or what do you want to have there? So let me see. Yeah, okay, let's leave it like that. It's good like that. So our codes, asset is the first element of account, right? So, and that is number one, and that is why we're having these for assets, right? The next thing we want to ask ourselves is, do we first of all put all the elements of account? Okay, let's try that first. After our assets, okay, so we are going to now do what's an opposite. I told us that we have 5 elements of account. After assets, the next one, we're going to leave a space because there will be class of assets that we're going to put here. I'm going to guide us. So we leave some space. Then we come to, or alternatively, let's finalize with one. But let's just put everything there. So after our asset, let's come to a far place. And the next thing we're going to have here, we're going to have what we call liability, right? Liabilities are things that we owe, things that we owe. So that is liability, is the next thing that we are trying to consider. So liability is the next thing. So then when we are looking at the liabilities, I just want to finish with the, what's it called now? I just want to finish with the element of accounts. So the number two item I said is liability. So create liability. That's the next thing, right? So now because liability is number two, we also come over to the codes of accounts, and then we call this one 200. 1, 2, 3, 200,000. That's fine. Then the next element of account after our liability, and that element of account that is staying on its own is what we call capital or equity. So we come over here to number three. Number three, we come here, we call it equity, right? Equity, right? So equity is number three on this list. Therefore, I'll come to this area and I'll call it 300,000. Fine. We've done that. So I think I told you that we have five elements. We've gotten the first two elements. The first three, I mean to say. So that means we need like two more. So what is the next one? So what's an opposite? Asset and liability. Equity is staying on its own. Then we now go on to say the next thing will be income, number four. Our number four is going to be income. So here is income. And because income is taking number four, the income is going to be 400,000. Sorry. 1, 2, 3, 400,000. Then the next one, the last one happens to be expenses. Now, our expenses, we are going to break our expenses into three segments. The first expense that we're going to look at is the one that is very important to the business. Why is that business in operation, right? What are those expenses that they must incur because they are in their line of business? That's what we're going to look at. So now, what are those expenses? The first one is what we call the cost of sales, right? So the first one is so we say number five is expenses. So expense ought to be number five, but because we're going to break those expenses down by hierarchy, like order of priority, right? To the organization, cost of sales is very, very important because that is the main reason why they are in that business. They are in that business to make money, and then there are certain expenses that they will incur because they are in that line of business. So that is their cost of sales. Now, because cost of sales is taking number five here, then we are going to have here to be 500,000. So 500, 1, 2, 3. Now, for people that are in the exam class yesterday, I told you about freezing your pain. So let's freeze this heading so that we don't start scrolling and not seeing what we are doing. So I come to this data. When I come to the data, then I actually want to freeze my pain, right? But it's not under data. Let me check review. Okay, let me see. I want to freeze my pain. It's not here. Let me come back here and it's hiding somewhere. I can't say it yet. Formula. Just hold on. I'm trying to check for where that guy is hiding, right? That guy. Let's check view. Yes, I've seen it. So it's under view. So I want to freeze the print. There are three ways we can do that. But let's just go and freeze only the top row. Yeah, that's what we want to achieve. So freeze only the top row. And then when we scroll down, we want to be seeing all these things that are at the top. So yeah, we go now. So we've seen that the first element of account is assets. And then because it's number one, we also give this one 100,000. The next thing is our liability. Liabilities are things that we owe to people. So liability is the next one, which is number two. And because liability is the next one, We gave it what? 200,000. Then the next one, we talk about equity. Equity is the third, right? So that's why we also gave it 300,000. Now the fourth is income. Now income, we also gave it what? Because income is a fourth, we gave it 400,000. That's the code. That's the code that in all incomes are going to receive, right? Then the last one, which is supposed to be expenses, we went further to break it down into their order of priority. So the first expense that is very important to the organization is what we call the cost of sales. So we have cost of sales. Then after this cost of sales, is another expense that is also closely related to this, right? The other expense that is closely related to this is what we call the operating expenses. Now, the operating expenses is another expense that is also closely related to this one. So I'll just copy this and I'll come to this place, right? I'll Control V. There, oh, undo, undo. I don't know what's going on. Undo. Yeah. So let me come here and copy this place. So I come here like this. I copy and yeah, we freeze the top so you can always see the top anywhere we go to. So I freeze the top, then I come here. I want to put it here. So this happens to be, it's going to become the sixth item on this worksheet. And what would that be? We call it an expense. It's an expense, expense, expense. What kind of expense is it? Is an operating expense. Operating expense. Yeah, so it's an operating expense. So we now come here. So because this is number 6, this becomes 600,000. So 600, 1, 2, 3. So you can see the order, the way we are doing it. So you can see that we started by looking at the elements of account. And the element of account, they are usually going to be 5. But because when we go to the 5th one, which is expense, we decided to break it down into their order of priority, right? So that's why we're able to get, we divided the expenses now into the cost of sales, which is very important to the organization, followed by the operating expenses, which also is important to the organization. Then the last one is what we call the administrative expense. So we have the administrative expense. So let's now come over here. Here, the last one, which is going to be number 7. I copy this. When I copy this, then I come to this bottom and I put it like this, which is going to be number 7. This is administrative expense. It's an expense as well. What kind of expense? Administrative. It's an administrative expense. Now, because this is number 7, we also come over here, we give it 700,000. Fine. So let's now have a recap, a quick recap. Now, when we are doing our chart of accounts, it's step-by-step method. The first thing we want to do is that we want to get the headings. What are the headings that we need, right? The first one is we want to get the code range. We already know that the we already know that the element of account, they are just 5, right? So here, code range, it will be 1, which is going to be asset, is the first item. Opposite of asset, if it's not an asset, then it's a liability. So we have liability as a second. Then also shows what the code will be on the account. So this number 1, we are starting from 100,000. Number 2, we're starting from 200,000. Number 3, which is equity, is going to be 300,000. Number 4 is income, is going to be 400,000. Number 5 is cost of sales. Now this number 5, this is where auto warehouse all the expenses. But because the expenses are of different types, we want to break them down by order of priority. By order of priority, cost of sales comes first. It's very important to the organization. Then after that, we now have operating expenses, and at the last one, we have administrative expenses. So we now understand now, if anybody should wake you from the dream, you know why we have number 1 here, which is asset, and you also know why we call the code this. Now, the next thing we want to do is we are done with that, right? We've looked at all those things. The next thing we want to do, let's now look at the classes of the asset that we have. What are the class of assets that we have? So the first class of asset that we have, I'm going to come here. The first class of asset that we have, which we are going to start from here, is what we call the cash and cash equivalent. So the cash, right? And cash, we have equivalent. So what we are looking, the way we are looking at it is we're always looking at it in the order of liquidity. How quickly can you actually convert this to money? Okay, so the most liquid asset that you can see under your asset account is the cash and cash equivalent. So under this cash and cash equivalent, what do you have under the cash and cash equivalent? So number one, the first thing you can have is you can have what we call the main cash account, right? So you can have what we call the main cash account. So let me delete this. We already know that this is what asset we take. So you can have the main cash account over here. So let's call it this, the main cash account. So I call it the main cash account. Probably there's a main cash account. Then there are other cash account, main cash account. Okay, so this is the main cash account. And so this main cash account, because asset is one of the is a cash and cash equivalent, right? So and it's they call it the main cash account. So what code should we give it? We already know that all assets should start from 100,000. Asset is they're all assets, whatever the class of asset, you start from 100,000. So what do? We call this one 100. So let's start from this one will be 100 and 10, 110,000. So 100, 100 and 100,000 and 10, right? 100,000 and 10. So that's what we're going to call the main cash account. Now, the other one, in case, okay, so the next one we want to have, because all these things I'm listing, they are all cash and cash equivalent. So let's now see that probably apart from this, you also have cash account. So I'm going to put like to indicate that it's cash account. I put a dash and I say petty cash, right? Maybe you have petty cash account. So the petty cash account you have of different class. You have the one that is being handled by the admin department. So you say cash is a cash account. So say petty cash account. So what do you now do? Now here, the first one is 110, 100,000 and 10. So what you do is that you now have this one, since they are all cash and cash equivalent. So you now call this one 111. Okay. So they are all cash and cash equivalent, right? 111. So that's that. Then what other thing? Maybe you also have another cash and cash equivalent that is actually handled in look. So what I'm trying to do is that I'm trying to do an account that I'm trying to create a chart of accounts for an automobile industry, right? For an automobile industry, that is the kind of chart of account I want to create. So we've seen that number one, there's a petty cash that is handled by the company, by the admin itself, right? The next one I want to look at is another petty cash that is actually handled in the workshop, right? So let's now come here. When I say, okay, let me copy this. Then here, I will now put this one as a workshop. The reason is because I'm creating a chart of account for um, an automobile industry. So you can decide to create whatever chart of account for any industry that you want to create. So if this is another cash and cash equivalent, then the last one was 11. This obviously should be 12. So we have 100, then 0, 1, 2. That is going to be 12. So now, out of the classification of assets that we are only dealing with the first category, which is the cash and cash equivalent. Now, apart from that, let's now ask ourselves, are there banks that we use? All these are petty cash, they are cash, right? So because they are cash account, then we want to come under our account type, right? Under our account type, we want to call them cash. So these are cash accounts. They're all cash accounts. This is also a cash account. This is also a cash account. So that is why you see that there is no gap between their, what is it called? There's no gap between their code of account. Immediately after, immediately we got the first main cash account, we say is 100,010. Then the next cash account, we say 100 and 100,011. The last one, we say 100,012. Now, the next thing you also want to now start taking into consideration is what are the banks that you make use of? Are there banks that you make use of, right? Which we also expect to, to contain money at the like balances at the end of the period. So we are working for banks now. So the first one, we now say bank, we want to put sorry, want to do bank. So it's a bank we want to create. So when I say, let's assume in your company, you work with money points interest account. So you say money points, money points interest, interest account, money point interest account, right? So this account. So obviously, this is obviously account type is going to be bank. So this is a bank, right? So that's not an issue. Now, what we're going to do now is that we are done with what we are done with the cash account. Cash account was taking 10. After 10, we go 11, 12. Now, because this is another category, this is the bank. We now go, we jump now, we now go to 20. So we now say 100, then we now say 020. So you can see that cash is starting from 10. Why for the bank is starting from 20, right? So any banks will now start becoming, after 20, we have 21, any banks 22, 23, depending on the numbers of banks that you actually have in reality. So the next thing we're going to look at now is we are looking at, let's say we have other banks that we also make use of. Probably we have Fidelity Bank, we have Wema Bank, we have Providus Bank. Okay, so those all of them are banks. So there won't be gap between them because they are banks. So after that, we have Fidelity Bank account. So we now come here also we copy, we say bank, right? So we say uh yeah. So this is gonna be Fidelity, the that is sorry, Fidelity, Fidelity Bank account. So then here, obviously, is also a bank. Now we've got to the first bank, which is our interest account, which happens to be the money point account. So the next thing we want to do is I've seen another bank again. The next bank is Fidelity. So here, because they are all banks, after 20, the next one is 21. 0, then 021. So they are all banks, no issue. There's no discrimination, they are all banks. So after the 20, the next one you're going to have is 21. Then as many banks as you have, let's also put Wema, let's put Providus. So we come over here. So this is going to be like, it's going to be 22 because there's another bank want to put 22. Then the last one, we can also have another one, which is going to be 23. Okay, so that's fine. So yeah, we now come here. You also want to copy this, then we just edit it. This is going to be Wema Bank. So Wema Bank account, right? Then the last one is going to be, is it Providus? Last one is going to be Providus. So this is going to be Wema. So we say Wema Bank account. So it's also a bank, right? So also put bank here. Then the last one we're going to have is Providus. So I also Control D. Then here I edit it, and then I want to call it a Providus. Sorry, Providus bank account. So here as well, this place also is actually a bank. That is fine. So you can see now we have been able to work out our cash and cash equivalent. Now, what other class of asset do we have? That is just one. That is just one class of asset out of, we are still under asset, right? Discover that everything that is asset is going to be from 100,000. So we are moving on. There's another asset also that we still need to check. After this, our cash and cash equivalent. The next asset that we're going to talk about is our receivables, right? Our receivables, that is the next asset that is in the hierarchy of liquidity. So after the cash, the main cash account, the next item that is very liquid is when our customers, when they pay us money. So we call it account receivable. So receivables. So this is the accounts receivable. So now we are done with bank. I told us for every unique thing we are doing, we are still under asset. This is another class of asset. So we are done with bank. So what happens? We jump from 20, we now come to something like 30. So we now come here, we now say this is 100, 0, and 30. So that is what we call our account receivable. So we can also come here, the same description will be here, account receivable. Okay, and then we know that account receivable. What kind of class of what account type would that be? Is also account receivable. So account receivable. Okay, so that's the only one that has the same name or true. So after we've gotten our account receivable, the next thing I want to do is I want to look at our cash sales to customers or any other thing, any other thing, cash sales to customer, any other advances that we give out. Okay, so any other advances, maybe we give out a loan, we give out all those things. So that is another classification of account. So I want to come over here and I want to call it cash sales, cash cash sales to customers, or in other words, is still part of our other receivables, right? We can call them our other receivables. Um, so under this one now, we are going to have something like under this one. So because the last one was 30, it's still an asset, right? We now call this one 40, 040. Then what are we going to have over here? The first one we can have something like cash sales. Cash sales, right? It's an asset as well, which you might need to go and lodge in the bank. So cash sales, we are going to call it, that is cash sales. So under it is going to be other current assets. So this is going to be other current assets. So just follow through. I know it's going to be a long video, but at least if you are able to learn the procedure, the concept, it goes a long way to assist you. So the next one we're going to do is we are done with all the cash sales. So the next one we want to do is we want to say, okay, after that cash sales, do we have, so we are done with anything cash sales. We are going to another class now. No, not class actually, but another kind of, this is, so this one, we have to jump some and call these like probably 45 in case there are other cash sales, there are other cash, maybe cash sales from different location, you can be able to capture it well. So let's call this 100, then we now put 45. So under this one, we want to call it maybe staff debt, staff debtors, staff debtors. So these staff debtors, then they are all still under other current liability. We're going to have other current asset. I need to say, all these are other current asset, other current asset under our account type. So apart from that, we are also going to have like maybe staff work advance, anything that the staff is owing us, staff work advance, staff work advance. So this staff work advance. Then we're also going to have something like staff salary advance, anything that relates to the staff salary advance. Okay. Then the next one, the last one, which I'm going to have here is withholding tax. So this withholding tax, I'm going to show us how to recognize it. For instance, if you issue an invoice to somebody and at the point of payment, the person deducts withholding tax, right? So when you are raising that invoice, you didn't know that that guy is going to deduct withholding tax on the money, right? So you've raised the invoice. It's fine. And the invoice has gone out. So what you need to do when you are now receiving payment, that is when you now take into consideration the withholding tax that has been deducted. So when we have these, because they are in the same class, we just simply drag and then we have the code of account set. So we are done with the next classification of assets. So we've done cash and cash equivalent, we've done account receivables, we've done cash sales to customers, any of our other current assets. So instead of me to put it like cash, let me just call it other current asset, current, other current assets. Okay, so that's what that is going to be. Then once we're done with that, let's now check another class of asset that we have. We have another class of assets. So let me just leave more gap. I think the class of assets should be up to, if I'm not mistaken, it should be up to 5, if I'm not mistaken. So you can see that we are working on only assets. We will soon go to liability. So now the next asset that we're going to work on now is we are working on repayment. There are some, there are some, there are some things, some expenses that you paid in advance. It's also an asset. Some expenses that you paid in advance. So we call them prepayments. They're also asset to us. So we call them prepayments. So out of that prepayment, let's come to the site first. Under our description, we have something like a prepaid rent and rate, prepaid prepaid rent and rate. That is number one. Pay rate and rate. We know that this prepayment they are also still coming to other current assets. So it's also other current asset. That is where we're also going to classify them. So other current assets. So we copy this, then we come here, we come and put here. So prepayment is number one. Out of that prepayment section, we also have a prepaid insurance, anything that you paid in advance, anything you paid in advance. So we have prepaid insurance. So we have prepaid insurance. Then the last one, and we're going to look at, we have prepaid dash. That's other prepayment that can ever come in. You come and put them under this classification. So here, if the last item was 40, then this one will go to about, is that not going to be 50? Yes. So this is going to be 50. So this one goes to 50. So we now say 100,050. So that's how that's going to be then. We now come here and let it add and add. We drag it down. And here we can see 51, 52, and all that. So we are done with that prepayment. Now there's another class of asset that is very important. Okay, according to liquidity. The next asset that is also very close to being liquid is what we call our inventory. Okay, inventory, though you cannot easily convert inventory the way you convert other things, but inventory is also very, very important. So in this slide, we call it inventory. So inventory. Okay. So now inventory now obviously is going to start from it's going to start from what's it going to start from? It's going to start from that is 100. They will say one, is that not 60? Yes, so that's going to be 60 because we are done with 150. So under this our inventory. Now, what industry are we? I said we are in spare part industry, right? So we are in motor vehicle industry. So the stock, the kind of stock that we actually make use of, right, is actually spare parts. Let's say we have spare parts, right? So spare parts stocks. spares parts, stocks is what we're going to have. And what account type is it going to be? It's going to be stocks. Okay, it's going to be stocks here. So it's going to be stock. So we are done with that. Then the last class of asset that we're going to have, which is very, very important, is what we call property, plant, and equipment. So let's now check the last class of asset. We have, let me come to the right and see if I've not jumped anything. Okay, no. So the last class of asset we're going to have is property, plant, then, and equipment. So property, plant, and equipment is the next one that we have. So that is property, plant, and equipment. Then obviously this is going to be 70, right? Because the last one was 60, then this is also this is going to be 70, right? So it's going to be 70. So we now come here. So the first class of property, plant, and equipment that we have can be, for assets, you're going to have them at cost. So when I say costs, at costs, what do we want to classify first? We say land and building. So we now say land, then and building. So land and building and buildings. So because we can have more than that. So now under this, our account type, now we're going to call it fixed assets. They are fixed assets. So fixed assets. So this is fixed asset. Then we now after that we are going to have property, plant, and equipment is another one. So we come here. So I now come here and I'll say this is going to be let me check. This is going to be, let me erase this, right? So this is going to be so the first one was actually land and building. The next one is going to be after land and building. What do we even have after land and building? Yes, we have plant and machinery. So now say plant, then and now say machinery, machinery, plant and machinery, and obviously is also a fixed asset. Fine. Then we have not started the code. Now the code here now is going to be 100, then 070. So that is how we are going to now do that. So before we do that, let me also try and add more space to this place so that we can have room to finalize with our asset. So we now come here and then I click on insert, and then we are able to finalize with our asset. So here we've looked at land and building, right? Look at land and building. The next one we're looking at is motor vehicle. So let's come here also. It's going to be at cost. Then we're going to say this is sorry, we're going to say this is the motor vehicle. This is motor vehicle. So motor vehicles. So these motor vehicles, right, at cost, and also obviously is also a fixed asset. Then what other costs are we looking at? We are looking at after motor vehicle, we have furnitures and fittings is another one. So I come here, I call these furniture, and fittings right? So that is that. And obviously that is also a fixed asset. Then after you're done with listing all this all this asset at cost, the next thing you want to do is you want to now get their accumulated depreciation account. So the last asset is going to be office building. Office building is the last asset that we have on this place. And obviously, no, not office building. I meant to say office equipment. Sorry. This is office equipment. So I delete this and I say office equipment. So this office equipment, and obviously is also a fixed asset. So what do you want to do now? All these things that we've listed, what we're going to do is that we are going to copy them. When we copy them, we just copy it like this and come and put them under here like this. Ctrl V. Then from where we are starting here, we are going to change the beginning to accumulated. So we just delete and we just put accumulated, which is going to be ACCUM, accumulated for that. Then go to the next one. So accumulated land and building. The next one is going to be accumulated also plant and machinery. So we say accum plant and machinery. We come to the next one. We also say this is an accumulated depreciation for motor vehicle, right? So we say accum D for motor vehicle. We also come here, we double click, we say accum D for furniture, accum D, accum D for furniture. Then we come here also, we double click, we say this is accum D for office equipment. Now, obviously, all these, they are all fixed assets, including the accumulated depreciation. They are all fixed assets. So this is how to get our asset account. So assets, they are all fixed assets. You get them at cost. After getting them at cost, then the next thing you want to do is that you want to get their accumulated depreciation as well. So now let's let this add. So we now click and then we drag it down, and fine. So we have done the code of account. Now we are done with assets, right? So I told us that we have different class of assets. We've done the first one. We are done with asset that we have. So the next thing we want to work on, apart from asset, we say it's words and opposite. After asset, we are going to have what we call what are we going to have? After asset, we have liability. So we don't need this space any longer. So let's try and delete this space because we don't need it any longer. So we just click and then we delete. We don't need the space. Now we're starting from our accumulated depreciation. The first accumulated depreciation, we are looking at the class, right, of depreciation. What am I saying? We are looking at liability, I mean to say. We are looking at liability. And then the first liability that we're going to look at actually is the one that is that relates to our sales, right? To our direct sales. And that one is going to be our account payable. So that is the first class of liability that we are looking at. So here at this side, we call these account payable. So it's just the opposite of account receivable. So under the class, right, it's going to be account payable, account payable, account payable. So account payables actually, account payables. Okay, so here we are starting from actually this 200, probably can do 210, just like we did the other time, or yeah, so we can do 210 actually. So let's do 210 here. So we come here, we click, and then here is going to be 1, which is 210. So that is 210. Then we can delete what is at the top away. I've deleted what is at the top away. So we have 210. Then at the side here, we're going to have account payable as well. So let me come and check if it's recording. Fine. So it's actually still recording. Beautiful. So I come over here. Then here we have account payable as well. Then here also the class is account payable, payables. This is also account payable. So we are done with one class of liability. What other class of liability do we have? We have loans. We have apart from loans, we have accruals, right? So we have, just like we have for assets, we also have for liabilities. So we have accruals. Accruals is the next one that we have on the list. So here we're going to call these accruals. Accruals. Accruals, right? AL, that is accruals. Then there's going to be an X here as well. So now this takes like, the first one was 10. This can take 20, 200, 020. You can take 20. Then here, what is the first accruals that we're going to have? The first accrual can be accrued salaries and liabilities payable. So you know that accrued, then come here, we say accrued salaries and allowances, allowances payable. So allowances payables. So this is the, then what we call it at the other end, we call it other current liability. So this is going to be other current liability. Yeah, so this is going to be other current liability. That is fine. So let's just copy, because we are going to have plenty accrual. Let's just copy it and let's copy and paste down all over here. Ctrl V. Now the next thing we want to do is we also want to look at accrued expenses. So that's the next one. So we now come over, we say, because we want to start everything with the beginning, we now say, oh, sorry, we now say accrued expenses. We have accrued expenses. The next one we can have accrued of audit fee. Accrued audit fee. So we now say in dash, we now say audit fees. Audit fees. Then the next one we can also say, yeah. So now the first one is we cannot have withholding tax here also withholding tax, that is payable, the one that is also represented by your payee, right? The one that we call payee. So in bracket, I can put, okay, withholding tax payable, okay. That is that. Yeah, so withholding tax payable. So this here withholding tax payable can be the one you're owing to the one you're owing, the one you owe to LRS, right? That is for the one you deducted from individuals. Then we can also have the one you deducted from companies. So that will be like NRS. So we come here, this is going to be NRS. The withholding tax are deducted from people who sold to you. Okay, so if they are individuals, you are paying, you are remitting it to LRS, but if they are corporate bodies, you're actually remitting it to the other people. So with that, we've looked at all those things. Then the next thing that is our payable, the next thing that is our payable is the actual payee itself, right? Payee. So pay as you earn. So let me just call it pay as. So pay dash as dash you dash earn. So that is another one that we are looking at, which is your pay. So it's also an accrued expenses. So that is that. Then the next one we can have employer slash employee pension payable. So this one we can have like a employer. Oh, sorry, employer slash employee pension payable. Pension payables, right? So that is what we have over there. Don't worry, we are done. We are almost done, right? We are almost done. So we are almost done with it. It won't take us much time again. So when we are done with that, so we can also have our opening balance adjustment in case you need that. The last one, you can have your opening balance adjustments. Okay, you can have your opening balance adjustment. So let's go and do our chart of account, our code of account. So the first one, we've identified that the first one is going to be 20. Then we'll just hold on and then fill it up, and then we have it like this. So this is how we are done with our liability. You know, it is many one, we are going to look at loans now. Loans is the last one that we're looking at under our liability. So the last one we're looking at is what we call the loans, right? The loans. Uh, the loans. Now for the bank loan payable and all that, so the loans now. So we're going to have like, can we call these long-term loans? So we call this other liabilities. The other one is other current liability, and this one we're going to call it other liabilities. So here, let's call these other liabilities. So other liabilities, right? So under this one, we have what we call the contract liability. Contract, the contract liability, liability, right? So the contract lab. Oh, this is not where I'm ought to put it. So I'm not supposed to put it here, but let me copy it and take it away from here. Control X and put it here. So this is where we are to have it. Contract liability, and then this is going to be other liability, the way we have it at the beginning. So they are all classified as other liability, right? So this is other liability as well. Yeah. So that is other liability as well, right? Other liabilities as well. So here is other liability as well. So other liability, right? Then also we have the last one, which is going to be our bank loan. These are going to be our bank loan payable, right? So that is the last one under our liability. Then the next thing we want to do is we now come straight to the next section, which is going to be our equity. Under our equity, we are going to look at the owner's contribution. So what did the owners of the business, what did they contribute to the business? That's what we're going to have under equity. So after that, we now look at income, then we now look at our expenses, and then we are done, right? So under equity, we have share capital, we have retained earnings. So we have owners, what will I call it now? Owner's interest, or should I call it, did I just call it, what is the word? Yeah, so owners, owners, O-N, O, O, O-W-N-E-L, owner's interest. So this owner's interest. So what do the owners, what do they get? So the first one we're going to look at is, the first one we're looking at is what we call share capital. So share capital, that's the first thing. That is share capital that they invested in the business. That's the first thing. So that share capital is going to be under our equity. So it's going to fall under equity here. At the bracket, is going to be equity. Then here we are going to have another thing is after they've invested their money, then there's something that goes to them, which is they get the retained earnings, right? When they finish paying everything, then they have right to start retaining things. So you come over here. Then the next thing, the next account we're going to look at is their drawings. Drawings in case. So drawings is also equity. Then the last one, prior year adjustment is the last one. Prior year adjustments. The prior year adjustments. Okay, so is also an equity. So that is that. So now this one now, let's now get what we have here. So this one is going to start from 300, 010. So that is that. So we now come over and then we now autofill it downwards. Yeah, so that is what we have over there. Now the next thing we're looking at now is what we call, so let me delete this one that is up here. We don't need the first thing here. There's no way out anything. Yeah. So what is the first thing we are going to do? The first thing we're going to do now is to Now come to our income. Our income is as important as any other thing, right? It's very important, such as our our expenses as well, our cost of sales, and so on and so forth. So let's work on our income. Our income is item number 4, hence is starting from 4, right? It's starting from 4. So since our income is number 4 and it's starting from 4, then what do we do? Let's start. What kind of income do we have? I told us that I'm working for somebody in the automobile industry. So in the automobile industry, what they repair vehicle, they do what do they do again? Apart from repairing of vehicle, they can also um okay, I'm coming, let me check what I'm looking to get. Okay, so apart from repairing of vehicle, um yeah, so they sell so these are all they get. Let's start working on that. The first kind of income that they get is this. So they get, because this is an automobile industry, so the first item that we're going to list is going to be 400, then 010, just like the way we normally do. So the first one is going to be sales, then sales. Here is going to be sales, then dash vehicle, vehicle, vehicle workshop, vehicle workshop income. So vehicle workshop income. So that is the first sales. And obviously this goes into the income account. So this is income, right? So that is what the account type is going to be. It's going to be income. So what I need to do is copy this anywhere our type of income is. You just need to fill it down. Okay, so those are income. So the first one is like probably we have income that we earn from the workshop, right? So that is the workshop income. Now the next income we're going to look at is um vehicle spare parts income. Maybe we make, maybe we have clients that we need to fix their vehicle. Now, before we fix their vehicle, we might need to get some parts to fix their vehicle. So that part we are going to get for them, we are going to collect money from them, right? In order to be able to get that part for their for the repairs of their car. So when I say vehicle spare parts, vehicle spare parts income. The next one we're going to look at is, apart from that, we are going to have vehicle detailing, right? So sales, we now have to talk about vehicle detailing income. And when we talk about vehicle detailing, we are referring to when we take the vehicle for car wash, they want to wash the vehicle, we call it vehicle detailing. Sorry, vehicle detailing income. The next one we're talking about is vehicle inspection and diagnosis. So that's the next income. So we say sales, vehicle inspection, and diagnostics. So let's come here. So that is when you want to like scan your vehicle. So vehicle inspection, right? Vehicle inspection and diagnosis. Yeah. So vehicle inspection and diagnosis income. Then there's another income again that we can talk about, alignment and rebalancing. So vehicle inspection and diagnosis. The next one can be vehicle. So this is just going to be alignment. Let me just do something like this. So this is going to be alignment, alignment and wheel balancing and rebalancing income. Fine. Then the next one, you can have another income, which is going to be like, let me see, vulcanizer. Probably they need to fix the tire. They need to mend the tire. So the vulcanizer, we can have a section where we collect money for vulcanizing, right? So vulcanizer. So the spelling is actually VUL. So vulcanizer income. Fine. That is vulcanizer income. Okay, so that's fine. Then the next one we can have overdue late fee income. We can have, yeah, we can just have any other thing like overdue, overdue, so overdue into bracket, either late fee, late fee income. Okay, so that's going to be that. Then the next one can be like a discount, discount received, discount received. The next one can be like other sundry income, right? So we can have other sundry income. So we can say sales dash other sundry income, right? Other sundry income. We can have finance, interest, less interest income, and so on and so forth. So all these are all income. Now, based on this industry that we are, that is why we have this peculiarity, this kind of income, right? If we're in another industry, then our income will differ. It won't be this. So this is how we're able to do our income, right? So what we want to do now is we want to now go further. So now do yeah, our expenses now. So the first one happens to be our cost of sales. Now, if we are selling vehicle, if we are getting vehicle workshop income, therefore we should have cost of sales for vehicle workshop income. You should have cost of sales for vehicle parts expense. You have cost of sales for vehicle detailing. You should have cost of sales for all these unique income. So let's come and copy from all this place. All this unique income, we should have cost of sales for them. So let's come and put them here. So what we'll now do is that we'll now click the beginning and we're now put cost of sales there to indicate that is the cost of sales. Okay, to indicate that is costs of sales. Okay, so let's check what we need to do. So we're almost done actually. So we now come here, we now put cost of sales. That is COX at the beginning. Fine. That is cost of sales, vehicle workshop income. We also click here. We have cost of sales, vehicle spare parts. The next one, we go again. So costs of sales. The next one, we go again. We also click. We have cost of sales. The next one, we go again. We also click. We have cost of sales. The next one, we go again. We also click. We have cost of sales. So now we are done with our cost of sales. So obviously, from here we discover that this is actually a cost of sales, not is a cost of sales, right? So because it's a cost of sales, what do we call the account type? The account type obviously is going to still be that cost of sales. Now, yeah, so that is going to be cost of sales as well. So it's in other words, it's going to become cost of goods sold. So we're going to have here, we're going to have something like costs of goods sold. We're going to have cost of goods sold. That's what we're going to have over there. Like that, that's what we're going to have all through there. So cost of goods sold. I'm going to copy it now and just copy downwards and Control V. Now, because this is going to be 500, then the first one is going to be either 510, something like 500, 110. So we are just following the normal pattern that we use for others. So we maintain the same pattern all through. So you see that we have done our cost of sales. The next one we want to work on is our administrative expenses and our operations expenses. So these administrative expenses and operation expenses, they are common for all companies. So anything that I do here, you can also replicate it under your own administrative expenses, right? So you can also replicate it under your own administrative expenses. So quickly, this list is very long. The first one I'm going to have is the first operating expenses that I'm going to have here is going to be so OPR dash. I want to have like advertising, 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 and marketing expense, and marketing expense. So that's expenses. That's fine. So, and then what is it going to become? It's going to be expense. Everything is going to be expense. So this is an expense. Expense type is also expense. They're all expense, right? Then the next one we're going to have. So let's copy all these expenses here so that we don't start typing it again. We copy it from there down, down, down like that. Onto V. Then the next thing we want to have is want to have operations, transport and travel expense. So you can have OPL dash transport, transport travel and travel expense. So that is that. Then the next one, we want to have OPL dash communication and data expense. So we have communication, then and data expense, which is unique to every organization. So the next one we can have, yeah. So this one is like peculiar to this organization. So we have operations. We now say automobile, automobile expense. Okay, so or expenses, as the case may be, automobile expenses, as the case may be. So let's put it as expenses. Then the next one I want to look at is apart from automobile expenses, we want to talk about operation dash. We talk about bad and doubt, doubtful. How do we spell doubt? Doubt. Um, doubtful, bad and doubtful debt. So spelling now doubt. Okay, so I think it should be okay. So doubt, doubtful. Yeah, that is that. So bad and doubtful. Yeah, so it's bad and doubtful debts. We're almost done. This is going to be like so bad and doubtful debts expense. So bad and doubtful debt expense, right? Then the next thing is going to become probably printing and whatever OPR. Then here we can have printing and stationery expense. So which is common printing and stationery. expense. Then the next one is going to be apart from printing and section, we can have salaries and allowance. We can have salary and allowance, OPR dash salaries and allowance. So these are almost similar to all organization. Salary and allowance. The next one can have OPR dash meals and let's say entertainment. Okay, meals and entertainment expense. So meals and entertainment expense. That is what we have over there. Then we can have another one. We can have yeah, other operational expenses can also be there. So PR dash other operational expense. Okay, then we can also have another one, hotels and accommodation expense, OPR dash hotel and accommodation expense. Then fuel and lubricant expense, OPR dash fuel and lubricants and lubricants expense. Then the last but not the least, which we have over here, is the um, discount allowed accounts. So OPR dash discounts allowed, discount allowed. So that is what we have under our operational expense. So since we know that our operational expense is starting from 6, we just come over here and then we now put 600 010. Okay. So when we have that, we can quickly take it and then autofill and get everything done. Fine. The last one we're looking at is this, right? So what we're going to do is let's first of all copy all these, right? We copy all these first. Even these two, we copy all these, we copy it here, we come here, and then we now put it at the bottom here. So once we do it that way, then this is going to be 700 010. So when we have it that way, then instead of us to have OPR at the front, we just simply edit it and put admin. So we just put admin, ADM, admin, fine. Also click again. We select, delete, ADM. We also do the same over here. We double click, select, sorry, double click, select and delete. Now have ADM. So to mean admin, like that. So we also double click this one. We come here, we select, we delete. We have ADM. The same thing applies to all of them. So we double click, we delete it, and we have ADM. We go again, we double click, we double click, we delete, we have ADM. We double click again, we have ADM. We go to the next one, we double click again, we have ADM. We go again, we double click, we have ADM. So we keep repeating the process until we are done. ADM. Again, the last but not the least, say, no, sorry. Yeah, so this is it. ADM, we put a dash, no, a dash. Then the last one, we double click. No, I think the last one will not have, I think we don't have the other one over there. So this is going to be other administrative expenses. So this is going to be other administrative expenses. So other ad, sorry, other administrative, other administrative expense and admin hotel and all those stuff. So I think this is not going to be here. This is not going to be here. This can't allowed. This can't allowed is always going to be an operational expense, right? So it's not going to be like a normal expense, right? So, and a lot of other things are going to be here. So we say administrative expense, employers pension contribution. So we can put that here. So ADM, that is administrative expense, employers pension contribution, contribution. So that's fine. What else? We can have legal and other professional expenses. We can have depreciation and amortization expenses. I think those are the things. Salaries and allowances, postage and courier services, cleaning and sanitation. We can have ICT, internet, so credit cards, bank charges, and all that. So I think there are some services that are not the same. So I think let's start from the top. Let us not just assume that they are having similar things. So let's start from here. Let's start afresh. Okay, we have ADM. Now put the dash. The first one is going to be office supplies, office supplies expenses. Fine. The next one is going to be bank fees and charges right? That's fine. Then we're going to become ADM, no, dash. We come and say like credit card charges. So that's credit card charges. The next one, apart from credit card charges, we have apart from that, we have okay. So let's see if this thing is still recording. Yeah, so it's fine. So apart from that, we have this is what we have apart from that. So we have apart from the credit card charges that I mentioned, I think what we have next is different from that. We have what can we have apart from that? So we have transport and travel expense. Transport and travel expense. So we come here, we say ADM dash transport and travels expense. Okay, so that is that. Then the next one is going to be communication and data expense, which is going to be the next one, ADM dash communication and data expense. Then the next one is going to be, yeah, automobile expense. That's the next one. So the next one is going to be ADM dash automobile automobile expense. The next one is going to be, do we have salaries and wages? Yeah, we have salaries and wages. We have ICT and internet. Okay, so let me put it here. we have ADM, we have not that, we have ICT, and internet expense. The next one we have cleaning and sanitization expense. So ADM dash cleaning and sanitization expense. So the next one we are going to have clean and sanitization expense. We're going to have postage and courier admin. We are going to have postage and courier, COURIER expense. Then apart from that, apart from having that, we are going to have printing and stationaries. Do we have the no? So we have ADM, right? We have dash printing and stationery expense. So after that, we have salaries and allowance. Do we have that already? Yeah, we have salary and allowance already. We have legal. After we have meal and entertainment, which is also there. We have what else do we have apart from that? We have meal and entertainment. We have depreciation and amortization expense. So let's come down here. We have ADM dash. We now have we have depreciation, depreciation, and amorti- amortization, session, amortization expense, Then the next one we are going to have legal and other professional fee. So legal, we are starting with ADM dash, no, ADM legal and legal and professional expense. Then the next thing we have apart from that, we have repair and maintenance. Yeah, repairs and maintenance. So I think that should be the last. ADM dash we have repairs and maintenance expense. So if you see what I've done now, all these things I've done, I'm just taking into cognizance the elements of account. So with this, we can now come over here and then we now autofill it and let it end add. And then that is it. You can delete this one at the top and then that is all. So you can see that at a glance, we now have everything that we need to have. We have the all the account head. I told us that we should start by putting the head of the account, right? This is going to be our code range, our account class, classification, the codes of account, the descriptions, and the account types. And then we work from the beginning by looking at all the elements of account which we listed. Then I also told us that the only difference is that when we came to expenses, we now classify them into three: the normal cost of sales, the operating expenses, and then the last one is the administrative expenses. So when we meet live in the class, then we can throw light more light on this, you can also ask questions, and I'll be willing to answer everybody that have any question to ask. So after we have done with this, the next thing we want to do is that we now come to our sage. When we come to our sage, right, then we now come to this, we now come and there's a way we can export, right? We can export, then populate the sheet, then we can now import it again. Okay, that is one method. So we can export the template of the way Zoho is. We export it. When we export it, then we now come and import it into, when we populate it, when we export it like this, just come over here, just click on export, export it like this, export current, export child of account. When you export it, then it's going to tell you all these and do the needful. Once you have done that, then we can now finalize on it. So on that long run, at the end of the day, I will save this now, and so that I can send it to us for practice. Let us practice with it. Let's be able to practice it. So I'm going to call this let me call this Zoho books charts of accounts. Okay, so so I'll just come and put it on my desktop so that I can always have access to it when I want to share it to you guys. Okay, so on that note, I think we are done with our class. Just to share it to us, and also share the video to us once it saves on our drive. Okay, on that note, I want to say goodbye, everyone. We meet in the class on Saturday by 8 p.m. to 10, and also on Sunday by 8 p.m. to 10. Don't forget to subscribe to our channel. It's very important. It means a lot to us. Yeah, see you in the live class. Bye.